Hi everyone, welcome back to the channel. My name is Tom and today I'm going to share some of the investments that I'll be holding for life. Now, quick disclaimer, I am just some random guy on YouTube. I'm not a financial advisor, so just remember, before doing any investing, to do your own research. Before we dig into these, let's just have a quick reminder of what an index fund is. An index fund is a mutual fund or exchange traded fund containing a big basket of shares which aims to replicate the returns of a specific market index, such as the S&P 500. What's great about index funds is that they often beat actively managed funds. Research shows that from 2001 to 2016, 90% of active fund managers did not beat the market. With that said, let's jump into these investments. So the first one that I'm invested in, and one of my favorites, is the Vanguard S&P 500 ETF. Now, thinking about my portfolio, I think this is actually my largest holding. It makes up around 35% of my portfolio. Chances are you've already heard of this index fund. You might already be invested in it. It continues to be the biggest and most popular fund on the planet. Warren Buffett himself, the world's most successful investor, has actually recommended the Vanguard S&P 500 index fund by name. If we have a look at the portfolio data, we can see that the top 5 holdings are Apple, Microsoft, Amazon, Facebook, and Alphabet, which is essentially Google and all of its holdings. It's got an ongoing charge of 0.07%. You're probably not going to find anything much lower than that. Now, if we have a look at overall performance, we can see that it's done pretty well over the last 5 years or so. The average rate of return has been about 15% per year for the last 5 years. If you invested $10,000 back in March 2016, you would now have $20,893. So you would have essentially more than doubled your money in 5 years. But just remember, past performance is not a reliable indicator of future performance. The market can go down at any time. However, if you've got a more long-term horizon, then I think this ETF is a great investment choice. If you don't have a Vanguard account, then chances are that you can find this on your online stockbroker. If you use Trading212 or AJ Bell, then you can get this index fund on there. So all in all, I think S&P 500 index fund, great investment choice because it provides a good return over time, provides instant diversification for exposure to the 500 largest US companies, and it's pretty much as low risk as stock investing gets. Now, the second one I wanted to discuss is very similar to the Vanguard S&P 500 ETF. It is the Vanguard FTSE North America ETF, ticker symbol VNRT. Now, what's different about it is that it consists of 135 Canadian companies in addition to the 500 US companies that make up the S&P 500. If we look at the portfolio data, we can see that its top holdings are the same. Apple is top holding, followed by Microsoft, Amazon, Facebook, and Alphabet, otherwise known as Google. Now, if we look at the overall performance of the past 5 years or so, we can see, like the S&P 500, it's done pretty well, which would be expected considering that it's got almost the same holdings. The average rate of return for the past 5 years has been approximately 15% per year. It has done actually a little bit better. So if you'd invested $10,000 5 years ago, you would now have $20,980, which is about $87 more than you would have made had you invested it in the S&P 500. So it's not a massive difference, but it is a little bit more. Okay, the third one, for investors who are a bit more adventurous and don't want so much exposure to the American market, the next one that I'm invested in is the Vanguard FTSE Emerging Markets, ticker symbol VFEM. This ETF provides instant geographic diversification as the fund comprises of companies which are based all over the world in places like China, Taiwan, India, Russia, South Africa, and so on. If we have a look at the market allocation, we can actually see that almost half of the exposure is to the Chinese market at 44.5%, followed by Taiwan at 16%, India at 11%, Brazil at 5.2%, and then the remaining 17 countries, the market allocation for those is at less than 5% individually. If we look at the portfolio holdings, you might actually recognize some of them, you might be invested in some of them. So the top holding is Taiwan Semiconductor Manufacturing, which is obviously a Taiwanese company, and then it's followed by the two Chinese e-commerce giants, Tencent and Alibaba. All in all, the fund comprises of 1,816 stocks. So it's very large and diversified ETF, which can be both good and bad. Good part of that is that there's likely to be some good companies in there which might, really take off, really do quite well for themselves. It might be the next Amazon or Tesla. The bad side is that there's likely to be some pretty crap companies in there as well, all mixed in the bag. With that said, emerging markets does come with a bit more risk. I would argue that it's one of the riskiest that you could get into. It has got a risk level of 6 out of 7, but there is also a lot of potential with the exposure it has, the massively growing Chinese and Indian economies. But yeah, I would caution you not to put all of your money into something with a risk level of 6 out of 7, as you could lose a decent amount of money, especially in the short term. Nonetheless, I think this ETF has a lot of potential, especially with its exposure to countries where the GDP per capita is still 1/3 of America's. Okay, the fourth one is investing into real estate without actually having to buy physical properties. And you can do this with something like the iShares Developed Markets Property Yield, ticker IWDP. This ETF is a solid low-cost pick for people who want exposure to the real estate sector, and it has an ongoing charge of 0.59%, and it also has a forecast dividend yield of 2% per year. So I like investing in real estate for a couple of reasons, but the main reason I like to invest in real estate is that it's because it's very much a tangible asset. It's likely to keep up with inflation. Historically, real estate has kept up with inflation, and that's because we're not making any more land, but the global population is growing every year. So that's why I like to invest in real estate. There's a few ways you can do this. You can invest real estate through an ETF like this one, the iShares Developed Markets Property Yield, or you could go out and buy physical property and be a landlord, or you could invest into specific REITs, which are real estate investment trusts. There'll be specific REITs for specific sectors. There'll be, you could invest in a REIT which focuses on commercial property in London. This ETF actually is comprised of a number of REITs. If we look at the portfolio data, we can see that includes a digital realty trust REIT, public storage REIT, Simon Property Group REIT, equity residential REIT, and so on. The annualized return for this ETF is 5.8%, which is lower than the S&P 500. However, I do like this ETF because it provides exposure to real estate without actually having to own a physical property. Finally, Warren Buffett said the best investment you can make is in yourself. But what does that mean? So instead of just investing in the stock market and real estate, focus on bettering yourself, watch less TV, and perhaps use that time to, read books on business, investing, and self-development. Or maybe you could take up a language. I myself am learning Spanish, so maybe you could pick up French, German, Mandarin, or Arabic. Work out more, try and work out at least 3 times a week. It keeps you looking good, keeps you fit. Drink less alcohol. There's nothing wrong with having a few beers on the weekend, but it's bad for your liver, it's bad for your waistline, and it's bad for your wallet. And finally, work hard on your goals and plan for the future. Don't just come home from work, put your feet up and switch on Netflix. Work hard on your goals and plan for the future. Okay, thanks for watching the video. I really appreciate it. And if you found some value in it, please make sure you drop a like and subscribe to the channel. And let me know what you think about these investments, and I'll see you in the next one.